Hello everybody and welcome to Project Trade. This is the trading highlight show, all of the key snapshots from our testing of trading strategies. In this series we are going to be trading a reversal based strategy, that is reversal strategy number 644. I got a good feeling about this one. Breaking down the strategy, it's got three parts to it which are based on a mixture of price structure and a cheeky technical indicator. We have made unique videos for each of these three parts which are linked in the video description if you feel that you need more. But don't worry, we will give a bit of an overview for each of them here so that we're all on the same base level. First up, we've got the standard deviation channel. Using linear regression analysis, the SDC plots a center trend line which has a parallel line on each side of it. There are a number of deviations from that center line. How many deviations exactly? Well, that's up to you. We're going for 1.5 deviations on ours, so the channel will look something like this. Now the channel can stretch for as many or as few periods as you desire, as will be 20 periods long. We don't want it to be too long of a look back, as price will always end up being within the channel, not doing anything for us, and we don't want it to be too short or price will be bouncing out of the channel every other period. Hopefully, much like Goldilocks, we get it just right. Next up is the money flow index indicator, sometimes labeled as the RSI with volume. It's a momentum oscillator which tries to determine overbought and oversold signals, and the values of the MFI are range bound within a minimum value of 0 and a maximum value of 100. There it is, you can see it beneath the price chart. Typically, as price increases or decreases, the MFI will do the same. Those greyish silvery lines you can see on the oscillator, those are marked out at values of 80 and 20. Being above 80 is suggesting that price is overbought, and below 20 is suggesting that price is oversold. Feel free to change the period input too. We're going with the default of 14, and maybe some of that conventional wisdom can get us through. Finally, for part number 3, we've got reversal candles. We'll have two basic principles that will apply for determining what exactly does constitute a reversal candle. Firstly, that the high or low in price of that candle is the highest or lowest price from the last 3 candles, to include the current candle. And secondly, that the open and the close of the candle are both in the opposite half to that highest high or lowest low. Let's have a look at our chart here to see if we can recognize some of those candles, make sure we understand what we're after. So there's a couple bullish reversal candles where firstly the low of price in those candles is a lower low than both of the 2 candles that came before it. Then secondly, both the open and close of the candle occur in the top half of the candle. It's suggesting to you that bears could only push price so far, but now the bulls have retaken control and therefore they could keep pushing price in that direction. And there's your opposite, a bearish reversal candle, where firstly the high of price for that candle is higher than the 2 candles that came before it, and secondly the open and close of price are both in the bottom half of the candle. From that we can judge that bearish momentum is taken over. Time of the bears. So that's the basics of the 3 individual parts to our strategy, but now we need to understand precisely how they're going to lead us into the trades. The most important thing to know is that we're going to work on the basis that having 2 out of the 3 parts giving us an active signal to enter a trade, that will be enough for us. We won't need all 3 telling us to enter because signals would likely end up rather rare. So we'll stick with the mantra of Robert Paulson that 2 out of 3 ain't bad. Let's start with the standard deviation channel. As we've said, we're going to be setting the channel line at 1.5 times deviations from the center trend line, and we'll measure the channel 20 periods back starting from the current period. So here's the signal. If for the latest period of the SDC price has been outside the channel, we can consider the SDC as active for an entry signal. Note the price doesn't have to close outside the channel. A high or low outside the channel is acceptable so long as price doesn't close all the way back across the other side of the center line. That could be considered too much of a reversal already. Next up, for the money flow index, as we've said, we're going to give a whirl on the default settings of 14 periods input with the levels set at 80 and 20. At any point the MFI value is closed above 80, we can consider the indicator active for a sell trade, as price could be considered overbought, and vice versa. Of course, if the MFI is reading below a value of 20 at its close, then the indicator will be active for a buy trade, as price could be oversold. Finally, for our reversal candles, we've explained the rules. All we need is for one to be present and in the same direction as our other signal. A bullish reversal candle will activate the reversal candle for a buy trade, and a bearish reversal candle will make it active for a sell trade. Let's just take a look at these entry signals with the 3 different combinations of 2 parts that could get us into a trade. So here we have the money flow index in tandem with a reversal candle. That's where the MFI is overbought, activating it for a sell trade, and up there we can see the bearish reversal candle. That means we don't need to check the SDC. We've got 2 of our 3 parts telling us that a reversal should be due. So from these signals signals, we'd enter into a sell trade. On our next price chart example, it's the reverse candle with the SDC that's giving the signal. We can see at the bottom where the MFI is, there's no overbought or oversold signals from that at all. But on the latest period where we measure the SDC to, we can see that price did find a low outside of the SDC, but didn't close across the center line in the top half of the channel. So we're good to go even though the close occurs inside the channel. In case it hasn't made it obvious, that's our reversal candle with the open and close both occurring in the top half of the candle. So the combination of those two signals being active, that would see us into a buy trade. Finally, we've got the MFI and the SDC combo. There's a chunk of time where we see it, the MFI is oversold, but it's not until price goes outside the standard deviation channel that we can actually get into the trade. On this occasion, price doesn't just find a low beneath the channel, but also closes outside of it. It's another buy trade entry for us. And not too much comes of the signal this time around, but that's something we've got to expect out there as well. There we go then. Those are the three ways that could get us into a trade in this strategy. But we better at least try to manage our money as well, as we would prefer to not be margin called. And to help us out with our money management, we are going to call on the assistance of our good friend, the average true range indicator. The ATR is an oscillator which by default looks back at the last 14 periods and finds the average high to low price range across those 14 candles. This gives us a pretty useful measure of price that we can take advantage of. That's the ATR value circled down there in the bottom left. When we refer to 1 times ATR or 2 times ATR, we're referring to 1 times or 2 times whatever that value is at the point of our trade entry. And we're not going all in on one method of money management, no sir. When we get a signal to enter, we will split our single trade into 2 sub trades. Let's keep those trades on their toes. Sub trade A will have a 2-to-1 risk reward ratio. That will be measured from the ATR, so our stop loss will be 1 times the ATR value from our entry price, and the take profit will be 2 times ATR value from our entry price. That way we will certainly win more from the winners than we lose from the losers. Can't go wrong, right? Just in case it does, for sub trade B, we are going to use a 1-to-2 risk reward ratio. Again, that's based on the ATR, so our stop loss will be 2 times ATR from our entry price, and the take profit will be 1 times ATR from our entry price. The battle is on. Which of the two do you think will come out on top? Don't worry about what you think, because we are going to actually find out. Hooray. Also, just to make sure we don't go crazy and lose all of our money, we are going to cap ourselves with each trade carrying a 2% risk to our capital. You can do the math on that, I assume. Each sub trade will have a 1% risk to our capital. Hopefully that's enough to stop the ship sinking. Last couple bits, it is going to be on the daily time frame. Some would argue that that is the most reliable time frame of all. I would be one of the some who would argue that. We'll be trading what we often trade on here, and that is the Forex major and minor pairs. All 28 of them we will cycle through once a day at the end of the day, checking for those entry signals as the candles are about to close. Outside of that end of day check, the world is our moisture and we can do as we please. One final note though, we can take as many trades as we like at any given time, as long as we're not going to be in 2 currency pairs which have too high of a correlation to one another. To make sure of that, we'll refer to our daily Forex correlation chart, which will have a numerical scale from -100 to 100. Fairly standard. If 2 currency pairs do have a correlation value of above 80 or below -80, then we'll only permit ourselves into one of those trades, as otherwise our risk might balloon due to a high correlation between the pairs. Risking 2% capital on the Australian dollar US dollar and 2% capital on the New Zealand dollar US dollar, for example, is basically like risking 4% capital. Fair enough. We better write up a journal on this one too, see if we can learn something that we didn't previously know. But that's it. Alrighty then, time to get onto those charts and start taking some trades. Here we are then, our first day on the charts for reversal strategy number 644. And we just got the Euro US dollar pulled up first, so to go through an example one. First off, we've got the money flow index pulled up down here. You can see it's got 14 period input. There's the 20 level and it's an 80 level around here somewhere. There it is. So pretty standard, as we said it would be, but no signal there. We look up and we don't have a reversal candle here. I mean, some might call this a hangman, but for our purposes, there was a higher high the day before. So we've got to see a new high in price and then pull back. Not what we're after for our strategy, which means we already know we won't get a signal from this chart, as we'll need 2 out of 3 parts to guide us in. And we've already checked 2 of those 3 parts now, and we know that they are not feasible for entering a trade. So that means we don't have to draw out the standard deviation channel to check. We already know there is no signal here. That's what we're going to do with the other 27 currency pairs now. And you're not going to see every single one of them, because that'll get a bit tedious. Every single chart every day is too much, too much. So we'll only take a closer look at the more interesting ones. The ones that are either giving us a signal or might be giving us a signal soon. Let's have a look for them. Not a lot of interesting stuff going on the charts. None of them had the MFI in the overbought or oversold regions, so it could be a while until we get a signal from the MFI, and not really any reversal signals out there either. Could be a slow start, but that's fine as long as we don't end up in any losing trades. Don't want any losers. No sir. And that means zero action for us to take tonight. So we'll just come back in around about 24 hours time, and we'll check those Forex major and minor pairs again, all 28 of them. No problemo. We'll be back then. We said we'd be back, and we are on our second day on the charts here, and we've got our Euro US dollar pulled up on the daily time frame, of course. It's almost another hanging man. I'd say I probably need to see that close a little bit higher to get a proper hanging man, but still no closer to an entry signal on this chart. As we can see the MFI, no signal there, playing it right down the middle near enough. 43.29818 at the moment. Yeah. Let's check those other 27 currency pairs though. Maybe one of them's got an entry signal for us. US dollar, Canadian dollar, not a signal, but we can see the MFI, it is heading towards the overbought territory. Pretty interesting considering price has mostly been ranging. I think we'll see the MFI come back down as these periods start to drop off from the calculation. This is currently the 14th candle in the calculation. So over the next few days, all these ones will start disappearing. And if we don't see them replaced by new fresh green candles, that's what's going to drag down the money flow index. Not enough positive money coming into the market. Oh no. Hanging man on the Euro Swiss franc. That is looking pretty long leg doji-ish as well. Great British pound Swiss franc. That money flow index won't need too much encouragement to get overbought. Currently still including these two red candles in the calculation, so when they go over the next few days, well, maybe we will see it push above 80. If we can get a reversal candle as well at the top here, wouldn't that be something? A nice reversal back down, bounce off the resistance level. It's good to dream. Pound yen as well starting to get up there as well. Won't need too many more green days. Been strong for the Great British Pound. Pound New Zealand dollar is very close. It has been close recently. 79.75 just 2-3 days ago there. Price been ranging, but if it can push again, find new highs, it's a good chance we'll get it overbought. No entry signals for us again tonight. But we don't mind. We are patient people here. We are going to wait for the trades to come to us. Let's come back tomorrow. Once again, we'll check those 28 charts. Sooner or later, we hope that the signal will come by our way. Back again for day 3. Let's get through those charts, see if we've got any signals. Bit of a reversal candle there, so I did break out the standard deviation channel just in case. Certainly not the strongest reversal candle, and it's no signal from it. Price not been outside the standard deviation channel. Not too close either, still a bit of a gap there from the high. That was pound US dollar. Dollar CAD MFI is still creeping towards that overbought region. Any day now, I'm sure. Not likely. A lot of red candles lately. And this is the Australian dollar, New Zealand dollar reversal candle there. Can't see the wick if I just move the channel back. You can see that there. And it has found a new high, but not outside the standard deviation channel. And nothing from the MFI. Same dealio here. Bit of a reversal candle heading downwards. Bearish reversal candle. But the MFI a little shy of the overbought territory and price inside the standard deviation channel here. Still no new entry signals for us. I do feel like we're getting closer though. Sooner or later we'll find what we're looking for. Let's come back tomorrow and see if there's a gift waiting for us. Day number 4 now. Still no signal in the Euro US dollar. What about those other 27 currency pairs? Alright, and we do have our first entry signal here on the Great British Pound US dollar pair. Nothing from the MFI. That's going straight down the middle of a value of 45. But we have got a reversal candle here. It's the highest high of the last 3 days. In fact, the highest high in a while, but it's open and closed in the bottom half of the candle. It's not recrossed the channel here, so we're all good. Before we jump right on in, let's just finish checking the charts. Good to know if we got multiple signals or not. We got the same signal on the New Zealand dollar US dollar as well. Sell trade signal from a reversal candle and price being outside the standard deviation channel. Same deal for the Australian dollar, Canadian dollar here. Reversal candle plus price outside the standard deviation. 3 signals so far. Australian dollar, New Zealand dollar, we've got the reversal candle, but price is inside the standard deviation channel. No signal there. And we've got the same signal on the New Zealand dollar, Canadian dollar as well. So that's all 4 of our signals. I do think we're going to have too much correlation on some of these though. Look at the Australian dollar, Canadian dollar versus the New Zealand dollar, Canadian dollar. They've got a positive correlation of 93, so we're not going to get on both of those. There's above the benchmark of 80. We'll defer to the MFI, and if we compare the two, the New Zealand dollar, Canadian dollar is slightly more overbought. That's 52.79 against the Australian dollar, Canadian dollar's 51.65. So we'll eliminate the Australian dollar, Canadian dollar. The New Zealand dollar, US dollar, that has an 81 correlation with the New Zealand dollar, Canadian dollar. So we're just about out of that one as well. So now the only other combination we've got to check is the New Zealand dollar Canadian dollar versus the pound US dollar. And that comes in at -48. So no clash there. We can get in on both these trades. Let's start with the pound US dollar. It's going to be a sell trade. Our starting balance is 20,000 US dollars. As we pull up the average true range indicator, we can see the value down here is 86.7 pips. That's what we're going for. So as we're splitting the trade, of course, 1% capital risk on each of the sub trades. It'll be 86.7 pips to one stop loss and 173.4 for the other. You can see exactly how both those risks are calculated. So firstly, we're entering a sell trade for 0.23 standard loss. And then we're entering one with quite a bit of a roundup actually, but it's 0.12 standard loss. We can set the stop loss and take profit here. This is at 1 times ATR to the stop loss and 2 times to the take profit. There we go. We can see that not above the day's high, but that is fine. This is a strong reversal candle. It's got to be getting down for us. And then we can set the other stop loss and take profit, just the reverse. 2 times ATR to the stop loss, 1 times to the take profit. There we go. We're in with the pound US dollar. Not using too much margin at all either. That's good to see. Be able to get plenty of trades in if we need to. Now we can move on to the New Zealand dollar Canadian dollar and we can pull up our average true range again. This time at 58.7 pips. It's a sell trade again, selling off the New Zealand dollar this time. There's the risk calculations again. Start off with a 0.43 sell trade and follow it up with a 0.22 sell trade. Stop loss and take profit, 1 times ATR to the stop loss, 2 times to the take profit, and vice versa as well. It's got to be. There we are set to go on those 2 trades. Nothing else for us to do with them. Let's just come back tomorrow and hope they've hit all those take profit levels. It's a reasonable expectation with how good these signals are going to be. No doubt, no doubt. Day 5, it is the last day of the week. Friday. Not much movement on our Great British Pound US dollar trade. We're in a sell trade here, remember. It did go up towards our stop loss, but has pulled back since, hoping to start heading downwards. Nothing for us to do with it. Currently around about $50 down between the 2 sub trades. Meanwhile, New Zealand dollar CAD, another sell trade here. This one a bit to our favour. Around about $75 up between those 2 trades. Still no stop loss or take profit triggered. All good, just crack on with them. No issues at all with those trades. And let's check those charts again, see if we got any new signals tonight. No extra signals for us tonight, but that's okay. We got faith in the 2 trades that we got open. Let's see them come good past the weekend. We'll be back in 72 hours time on Monday night. Checking these charts again.